Hi, everyone. I'm Gene Marks, and today I'm here to help you, small business owners, better understand the federal government's Coronavirus Aid, Relief, and Economic Security Act, otherwise known as the CARES Act, and specifically detail how you can apply for and access Paycheck Protection Program funding at this critical time for your small business. At this moment, Congress is working on replenishing the Paycheck Protection Program. So I'm going to discuss some other ways you can also get some cash for your business in these challenging times. Today's webinar is sponsored by OnDeck, the leading non-bank online lender to small businesses in the US. OnDeck, as well as other SBA approved banks and lending institutions, will be accepting applications for the program once additional funding is made available by Congress. Again, my name is Gene Marks. I run a small business outside of Philadelphia, a 10-person consulting firm, and I also write for a bunch of other places that you might know. I write weekly as a columnist for the Washington Times, The Hill, the Philadelphia Inquirer, The Guardian, Forbes, and Entrepreneur, as well as running my own business. And I've been spending a lot of time on the Paycheck Protection Program and other funding programs that have been made available by the federal government and other sources as well. I've been answering a lot of questions for small business owners around the country that are trying to navigate their way around the coronavirus pandemic. Many of my clients, my business as well, has been affected with significant revenue declines and impacts. For some people have had to shut their doors and significantly curtail their businesses. Right now, it's imperative for all of us to maximize cash. Where can we get cash as cheaply as possible? How can we manage our businesses through these tough times, which hopefully won't last for too much longer, so we can get back to work and grow our businesses? In this presentation, I'm going to share with you what I've learned. This is not my own stuff. This is all stuff that I've gathered from talking to business owners, the SBA, congressmen, people in the federal government, people that are working to help small businesses all around the country. There are at least 6 places you can go to find cash, and I'm going to talk about all 6 of them. I want to emphasize the Paycheck Protection Program, which I will get into more detail about in this conversation, but this is where you can go to get cash. So let's get into it, and let me start. Before I actually do start, please take notice if you look at your screen at my email address. It's gene@marksgroup.net. And although I am very grateful for OnDeck for sponsoring this presentation, let me also say that if you have any specific questions about this, your own scenario for your business, please do not hesitate to contact me, email me directly, and I will be happy to help. Okay, let's get into the details here as to what will help you and how you can get cash for your business. The first place that I'm telling my clients and my readers and other business owners to go is the Economic Injury Disaster Loan Program. That program is administered directly by the Small Business Administration. Right now, it is like the Paycheck Protection Program, out of funding, but we are waiting for Congress to authorize additional funding, and I do expect that to happen. This program has been around for a number of years. It was originally designed to help small businesses that are in disaster areas cope with and survive and get immediate cash from the government to get them through the disaster in the form of low-cost loans. So the infrastructure is there. And although I was very optimistic at the very beginning of this program when they announced that it would now be available to all businesses that are impacted by coronavirus, I thought, wow, we have an existing program here administered by the SBA, should be fast, should be a quick turnaround. Unfortunately, it hasn't been as quick as I was hoping it would be. And the main reason why is really just volume. The SBA has been inundated with applications and they need some time to catch up. It should not stop you from applying. Once new funds have been authorized, once the SBA gets through the application process, your application will be seen to, and I do encourage you to apply for a loan under this program. Now, the program itself is eligible for any business that has less than 500 employees. There are some businesses like seasonal businesses or companies that might be subject to unusual fluctuations that may still apply and may be eligible for these loans. So don't completely discount yourself out. You can ask the Small Business Administration. However, as a rule of thumb, you are eligible for this loan if you have less than 500 employees. And like I mentioned before, you do not get this from a bank or a financial institution or a lender. You get this loan directly from the SBA. The loan application process is online. It's quite easy to do. It's something that I've gone through a bunch of times with different clients. It's definitely something that can be handled. So strongly, encourage you to go directly to SBA.gov and make that application. Now, how much can you apply for? The loan itself is up to $2 million you can get per company, and the interest rates that it's being offered at are extremely attractive. 2.75% for nonprofits, 3.75% for for-profit companies. And these are fixed rates. And not only are they fixed, but they're fixed over a very long period of time. There is a 30-year, up to a 30-year payback for these loans, which is extremely attractive if you think that interest rates might be going up in the future. Now, there are some advanced provisions under these loans as well. When originally introduced for the coronavirus, people affected by it, the SBA said it was giving out $10,000 advances. Well, it's still true partially. When you apply for the loan, you are eligible for an advance of $1,000 per employee up to $10,000. The advance was supposed to have been made within days of the filing. Unfortunately, I'm finding that that's not been the case. It's taking longer, but it will eventually happen. The advance itself is something that could be just a grant. If you apply for the loan and you get turned down for the loan, you can keep the advance. If you do get accepted for an EIDL loan, then the advance will be applied to your open balance and you'll have to pay that back over the term of the loan. Finally, if you have a relationship with the SBA, you've done work with them before, you've gotten loans for them before, which effectively means that you're in their system and they know about you, then you can actually get money, more money, even faster. Apply for the SBA Express Loan Program. You'll see it right on their website. And if you do that and they've got you in the system, instead of $10,000, you can get a $25,000 advance and you'll get it just as quick as the other $10,000 advance, hopefully quicker because you're already in that system. So having a prior relationship with the SBA should certainly benefit you. Recap here, these are loans and loans only directly from the SBA, low interest, fixed, long-term. Any business, regardless of size, whether you're an independent contractor or sole proprietor, or you've got 200 employees, you can apply for these loans. They're for working capital to help fund you through this disaster that is the coronavirus pandemic, and definitely something that I would recommend that you apply for. That's the first area of cash that you want to consider. The second area of cash is what you probably heard about already, the Paycheck Protection Program. Now, like I said in the beginning, funds for this program right now have run out, but Congress, I believe, and most people do as well, will be initiating and approving more funds for this program. The program itself is different from the Economic Injury Disaster Loan Program for two big reasons. Number one, you do not get the money from the SBA. The SBA guarantees it, but you're going to go to a financial lender to get your money. And number two, even though it's a loan, a good portion of the loan can be forgiven, which means in effect it's a grant or money being given to you from the federal government to basically keep the lights on and people employed. So like I mentioned before, it's a loan program, but it's through FDIC insured or SBA lenders. OnDeck Capital is one of those. They are an online lender that has an infrastructure and the technology and the ability to make the experience fast and user-friendly. I strongly recommend that you lean towards online lenders like OnDeck Capital because these are companies that have the technology, I believe, that are more suited for these kinds of loans, certainly than other banks, whether they're big banks or community or regional bank. Having said that, if you have a good relationship with a banker or a community banker, by all means, as long as they got experience working with the SBA, that is what you are looking for. These loans are going to be up to $10 million that you can borrow, and I'll explain to you how much you can get of that $10 million in a minute. It's a 2-year loan that you have that would be outstanding at an interest rate of 1%, and the payments would be deferred for 6 months. So whatever you get a loan by, say you get loaned in the next 2 weeks, you're in May of 2020, you wouldn't need to start paying it back until 6 months after that, November of 2020, and there will be a loan at a 1% balance. Now the question, well, before I even get that, some other things, there's no collateral for this loan. There's no personal guarantees for this loan. There's no fees. You're allowed to, if you want to pay the loan back early, there's no prepayment penalties is all. So there's a lot of, lowered standards to get a hold of this money. And that's what the intention of this program is, to get the money out to small business owners so that they can stay employed and their employees can stay employed as well. Now, $10 million is available to each company. How much can you get? You have to go through a loan availability calculation. And that calculation is based on 2.5 times your average monthly payroll. What you need to do is you need to go back the prior 12 months, figure out what your annual payroll is, and then you need to figure out what your average monthly payroll is, and you get 2.5 times that amount. If you're a seasonal business, that's okay. You want to show the comparable periods of monthly payroll. So for example, if your monthly payroll was like nothing during the winter, but then it gets to a bigger level during the spring because you're an outdoor business, you can show the comparable prior year period payroll from last spring to come up with what your average monthly payroll would be. The payroll itself, it's 2.5 times that average monthly payroll amount. And what does that payroll include? Well, you go to your employees, it's their salaries, it's their hourly wages, it's any commissions or tips that you have paid to them, and it's capped at $100,000 per employee. So if you've got an employee that's making, say, $120,000 a year, you can only include 100,000 of that in the payroll calculation to see how much of this loan is available to you. If you're a business owner, your payroll gets included as well. If you say to me, hey, Gene, my payroll isn't, I don't take payroll. I have a partnership or an S corporation. I just take a distribution or money out of the business. That's okay too. You need to go back to last year's tax return and find out how much of your income was subject to self-employment tax. The income that's subject to self-employment tax, that's the number you would use when calculating your payroll for purposes of this loan. In addition to all that compensation, you can also add in vacation payouts, any sick or medical leave payouts that were made, your premiums that you're paying for group health care, your payments that you're making for any retirement plans as well. Any state and local payroll taxes can be added in as well. The only thing you cannot include here is you can't include federal payroll taxes, like whatever the employer portion is of your FICA or your Medicare. That does not get included. And you do not include any payments that you made to independent contractors because they're not on your payroll, so they're not part of this calculation. But that's all the stuff that you put into payroll. You look at what all those numbers were from the last 12 months. You figure out what the average monthly amount was. You multiply it times 2.5. So say your average monthly payroll was $100,000 a month. 2.5 times that, you say you can get a loan for $250,000. That's how you calculate the availability. Now, here's the big part of this, as I mentioned earlier. It's not a loan, but it's a forgiveness program as well. The government will let you go back and submit documentation for some of these expenses and get forgiveness. In other words, reduce the amount of the loan. In other words, basically the government will pay for some of these expenses. So after an 8-week period ends from the time that you got your loan, that you actually got funded, 8 weeks later, and after June 30th, that's when the program ends, you're going to go back to your lender and you are going to provide documentation that justifies not just your payroll, but some other expenses as well. If you have a mortgage, your mortgage interest. If you have rent, your rent. If you have utilities, your utilities. You can claim all of those for forgiveness. You're only limited to the fact that 75% of what you claim has to be related to payroll. So you can put that documentation in and get forgiveness. So which means that if you got that $250,000 loan and you got $200,000 of forgiveness for these expenses, your loan balance would go down to $50,000. And then you would owe that back over 2 years at 1% interest, with your first payment not being due for another 6 months. Now, some other restrictions that you need to be aware of, okay? You're required to restore your salaries and headcount by June 30th. So whatever you were paying your people and however many people in your payroll that you had full time when you got the loan, you have got to restore that back to those levels by June 30th. If you don't manage to do this, you don't lose all the forgiveness, but you will lose some of the forgiveness. So therefore, you will get some forgiveness, but just be aware that if you don't not manage to restore everybody, all the forgiveness aren't going to be there. Now, you can use this loan in addition to the economic injury disaster loan. So if you get an EIDL loan, that's fine. Just make sure you don't double dip, which means that don't take funds from the economic injury disaster loan and use it to pay for payroll and then ask for forgiveness under the Paycheck Protection Program. You can't double dip. My recommendation, if you're going to get either or both of these loans, set up separate bank accounts for them both, put the money segregated into both of those accounts so you can easily track the expenditures you're making out of both, just in case you ever get audited in the future. You are allowed one loan per tax ID. So once you got your loan, that's it. You got your loan. And finally, and this is very important, this is an agreement between you and whoever is loaning you the money. So if you're getting this paycheck protection loan through OnDeck, for example, this is an agreement you will have between yourself and OnDeck. The money is being guaranteed by the federal government, but really your relationship is going to be with OnDeck. So make sure you're aware of that. Read the agreement carefully, ask your questions, and understand the terms of the loan and the terms of forgiveness, that they're consistent with what I'm talking about here, so that everything is good. So when you go back into putting money in for forgiveness over the summer for expenses you had in the spring, there'll be no arguments as to what is allowed and what is not allowed. Now, some questions have come up over time, and again, I've been answering so many on Twitter and on television and radio and through the articles that I'm writing. And there's been just a few common ones that I just thought would be helpful if I just addressed here. Some may not apply to you. Number one, if a company is foreign owned, can they get a paycheck protection loan? And the answer is yes, as long as they have a federal tax ID number. If there is a foreign owned company here and they've got people on their payroll, they're employing people, and they've got a federal tax ID number, they can also apply under the Paycheck Protection Program. What about independent contractors and proprietors? Can they apply under the Paycheck Protection Program? And the answer to that is absolutely yes. It is open for independent, even if you have no employees, you've got yourself as an employee, which means that you can show evidence of your self-employment income, your income that is subject to the self-employment tax, as well as any rent or mortgage interest or utilities that you're paying. You can get a loan and get forgiveness even if you're an independent contractor or a proprietor or a Schedule C type of filer. So bear in mind, it's not just for companies with employees. The bank participation has been, a question. People getting frustrated with applying to banks. My advice has always been this: listen, you want to work with a financial institution that has got some experience working with the SBA. And I realize that OnDeck is sponsoring this presentation, and I appreciate that very much. But really, and not even related to that, I have been recommending to many of my clients to go to online lenders like OnDeck over their own banks, mainly because you will find the experience to be a lot more user friendly. Why? Because online lenders like OnDeck, they already have the infrastructure and the capabilities to handle these types of loans and processing and data that really a lot of banks, particularly smaller banks, don't really have in place. I have many clients that have been using online lenders like OnDeck and have reported to me very positive experience, and that is what I've been recommending to my audience. Finally, what about if you have multiple companies? Can you get multiple Paycheck Protection Program loans? Possibly. I mean, you can get one loan with each federal tax ID, but you better be very, very aware and very careful about the affiliation rules. Even if you have 5 or 6 companies with 5 or 6 different federal tax IDs, if you own a controlling interest, or if you have managerial or undue influence and control over those companies, the SBA could easily argue that they should all be rolled up under one loan. And if that means that all those employees then exceeded the 500 employees maximum you can have under these loans, it might be a potential issue for you. That is why some venture capital firms and hedge firms are having a problem, because they have a lot of companies in their portfolio that they have to demonstrate that those VC firms aren't exerting undue influence over them. So it's an issue. So if you have multiple companies, talk to your attorney about this and make sure that you are, within the rules to be able to do just that. So that's what you need to know about the Paycheck Protection Program. The Economic Injury Disaster Loans, that's loans directly from the SBA. Paycheck Protection Program, loans from a lender like OnDeck. And not only that, you can get forgiveness as well. Apply as soon as you can. There will be more funding available. I am so sure of that. It is a very, very important benefit for it to help you. So we've talked about those 2 ways to get cash, but I've got some other ways for you to get cash as well, because any source of cash is important in these very challenging times. So the third way has to do with taxes, particularly payroll taxes. And there are 2 things that you should be aware of when it comes down to payroll taxes. The first is that you can defer your payroll taxes. So whatever federal taxes you are responsible for as the employer's share of FICA and Medicare, those taxes you can defer until 2021. You still have to pay them, but the government is giving you some time until you have to pay them, which basically means you could leave the cash in the bank to use for other purposes. So talk to your payroll service company, talk to your accountant, make sure that you are doing that you are deferring those taxes if you need to do that, because you want to have your cash available for another source. So that's number 1. The second source of cash when it comes to payroll taxes has to do with payroll tax credits. And when I talk about payroll tax credits, these are what the taxes that you are paying on behalf of your employees if you are not participating in the Paycheck Protection Program. You can get them back in the form of credits. In fact, you don't have to pay them at all. 50% each quarter of every employee's salary up to $10,000 can be claimed as a payroll tax credit, which means that if you've got, say, 10 employees and they're each making, $10,000 a quarter, then you can take a $5,000 credit on their salaries for each of those employees, which means that's $50,000 as a tax credit each quarter. You can take that, and you take that credit directly on your payroll tax returns. You can use it to offset any employer taxes that you owe, so you don't have to pay the taxes. You can use it for other purposes. And if there's anything left over and you get a credit back, it's a refundable credit, which means the government will issue you a check and give you cash. So it's refundable. It's quarterly. You do it on your payroll tax quarterly filings. Talk to your payroll service company or your accountant, whoever is doing your payroll. You cannot participate in the Paycheck Protection Program if you want to claim this credit. So if you're doing the Paycheck Protection Program and you're getting your loans forgiven by the government, again, it's double dipping. You can't also say that you want to get a credit for the taxes as well. There's some other restrictions. To get this credit, you have to prove that you have either been forced to partially or fully suspend your operation because of the COVID-19 pandemic, or that your revenues have declined more than 50% as compared to the same period in the prior year. And bear in mind, there is another payroll tax credit available if you are offering by federal law now paid time off for sick time and family leave related to the COVID-19 pandemic. You get a tax credit for that as well, but I'm not including, that's separate from this paycheck tax credit that I'm talking about. This tax credit, the 50% tax credit, is called the Employee Retention Tax Credit. Google it and look it up. Talk to your accountant, talk to your payroll service company, because it is a great way to save very vital cash that you can use for other purposes during this period of time. So that's number 3. Number 4 has to do with unemployment. Look, if you're an independent contractor, if you're a sole proprietor, if you're out on your own, if you don't have any other employees, sure, you can apply for the Paycheck Protection Program, and you might find yourself getting very well reimbursed for that. But you should consider unemployment. If you have to consider unemployment, independent contractors and proprietors, sole practitioners, Schedule C people, freelancers, all of us are covered now under the unemployment law because of the CARES Act. And because of that, you can go to your state and apply for unemployment. If your state says to you that you're not eligible for unemployment, and I've been hearing some of that, they're wrong. You are eligible for unemployment under the CARES Act. Now, be aware, the states themselves, they've had some issues. Now, if you are eligible, you'll get the state minimum unemployment that you're entitled to, plus an additional $600 a week that's stipulated by the CARES Act through the end of July. Now, the states themselves, some of them are very much getting up to speed on this process. So many of those states themselves, their websites have not been updated. A lot of times their employees haven't been educated. This is kind of a new thing for them, providing unemployment insurance for people that were not former employees. So you're going to have to bear along with them. Also bear in mind that a lot of these states are trying to update their databases and their systems, which are written in very, very old programming languages. And oh, by the way, a lot of the state workers are working from home, so they're kind of disabled because of that. So it's a long process, and you're going to have some patience. But applying for unemployment might be a lot easier, and it might bring you more cash if you're an independent contractor or a proprietor than going for the Paycheck Protection Program. So it's another thing to think about. Go through, do the math, see which it provides you with more income, Paycheck Protection Program money or unemployment, and then decide and go with that. So that's number 4. Number 5, state, local, and corporate. There are many states and many cities that are offering relief for their local small business owners. From a state perspective, California, Florida, Michigan, New York, all have programs, grant funds, loan funds as well, other types of assistance that will help their small business owners that are located in their states. And many cities, particularly the larger ones, Philly, where I live, New York, Los Angeles, Chicago, are also offering their own programs to provide relief, grants, loans to their small business owners. You really want to look into those options there because there's money that's there to be had. In addition to your state and local, a lot of companies are stepping up to the plate. Facebook, JP Morgan, and Verizon, as well as the Opportunity Fund, a nonprofit, all 4 of those organizations have set up funds specifically for small businesses, grants, loans, or the combination of both. Facebook, for example, has set up a $100 million fund that is offering cash in the form of grants, loans, and advertising credits on Facebook, of course, for small businesses that need it. Same thing with JP Morgan, Chase, Verizon Opportunity Fund. Money that is out there and available. What you need to do is apply. There are restrictions. It depends on your region or your locality. It depends on your need. It depends on some other factors as to whether or not you're small enough to be able to be accepted into the program. But you should absolutely look into those 4 programs and Google around for any other private organizations, nonprofits, or companies that are offering resources and support and money for small businesses that are affected by the COVID-19 pandemic. Finally, is the Main Street Lending Program. This is a program that it's not officially live yet, but will be very, very soon. It is $600 billion in funds that have now been made available by the Federal Reserve to all of the banks that are members of the Federal Reserve. And what the Federal Reserve is saying, here is money that is out there. We are going to guarantee this money. You as the banks, you go out there and loan this money. You can relax your lending requirements if the loans go bad, we have your back. We want you to get the money out there to businesses of all sizes. This loan program is a little bit different because it's not just for small businesses, it's for small and medium-sized companies. In fact, the minimum loan that you can apply for under this program is $1 million. The maximum is $150 million. And the terms are quite good. It's a variable interest rate, but right now not ranging anymore between 3 to 4%, and it has a 4-year term. The proceeds from these loans can be used for working capital, equipment, property, but you can't use it to refinance your debt. So talk to your financial institution, talk to your lenders, see if this is something you want. If you need a loan that's in excess of $1 million, that's where you're going to start from. This is a really good resource to get that kind of money that you need to make your way through this pandemic. So let me just recap, actually, before I even give you these resources. So number one, there's the Economic Injury Disaster Loan. Straight loans, 30-year, low interest, right from the SBA.gov. Money has been held up right now, but it will be coming. Go and apply, get in the queue, long-term financing for any businesses affected by COVID-19. Number two, the Paycheck Protection Program. Those are loans available through financial lenders like OnDeck, where you can borrow the money up to $10 million. It's based on a formula of payroll, and then you can get of that money forgiven by your financial lender as long as you provide the documentation for payroll, utilities, mortgage interest, and rent. So it's a forgivable loan program. Whatever's left over, a very low cost, 1% annual interest as well. So the Paycheck Protection Program, a very, very good resource. Number three, tax credits and deferral. Defer any payroll taxes that you owe to 2021 so you can use that cash for other purposes. If you're not participating in the Paycheck Protection Program, look into getting the tax credits, the employee retention tax credit. $5,000 per employee is what you could get up, ultimately per quarter as money that you don't have to pay in federal payroll taxes. Look into that. Number four is unemployment. If you're an independent contractor, just a sole proprietor, a freelancer, apply for unemployment to your state. You can't get unemployment and also get paycheck protection money. You have to choose between the two, but getting unemployment might be easier and it might actually be more lucrative for you. So look into that. So that's number four. Number five is state, local, and corporate funding. Check with your state, check with your city, and then talk to Facebook, JP Morgan Chase, Verizon, the Opportunity Fund. There's all money there to be had in the forms and grants and loans. And finally, if you're a little bit of a bigger business, if you're looking for financing in excess of $1 million, the Main Street Lending Program has been made available by the Fed through all of its member banks. Low interest, short-term loans that you can use for working capital, equipment, and property as well. Regarding the Paycheck Protection Program, these are some valuable resources that I have found, the summary in the Treasury Department. But just go to treasury.gov. There's a section there for small businesses. That is the definitive documentation that you will need to understand the Paycheck Protection Program. If you have any questions about it, those are the sources. That's the place that I go to when I want to get answers. There's a good sample lender application form at the SBA.gov, which gives you a good example of what documentation you'll need to provide to your lender, so you can get all that together before you start the process. There is a loan calculator to go through that the American Institute of Certified Public Accountants offers, so you can see how much money that would be available to you under the Paycheck Protection Program. It's a nice little spreadsheet that lets you do that. So let me just say right now, thank you so much to OnDeck. As we have discussed, the Paycheck Protection Program is designed to provide a direct incentive for small businesses to keep their workers on payroll by providing low interest loans to small businesses impacted by the COVID-19 pandemic. You can apply at any SBA approved bank or lending institution. And OnDeck, our sponsor for this webinar, will be accepting applications for the program once additional funding is made available by Congress. You can check out their site at ondeck.com/COVID-19 for any updates they have on the program. I hope the information we share with you today was helpful. I wish you, your family, and your employees nothing but the best in these difficult times. I can assure you these times will be behind us at some point. You need the cash right now to navigate your way through all of this. And I promise you, once you do, and these times are behind and you're back to business, you will grow again and continue to grow. So have that faith, but also have some cash to see you through. So thanks very much for listening. That is my email address if you have any questions. And from now, I will just say, stay well and stay safe.